Hello, this is the TradeSite U.S. Stocks and Futures Market Preview for Wednesday, the 10th, Thursday the 10th of March and Friday the 11th of March. Hope you had a good trading day on Wednesday. It's been a weird couple of days. Obviously, we got a big gap up. Wednesday, we'll look at that in the Intra Day Action, but we still barely got to the highs of the prior day. I mean, we didn't really go anywhere. So let's look at the ES front month futures contract. This is the daily chart, the broad market in futures form, and as you can see, we're still very much under the downtrend line. I think at best right now the downtrend line is maybe at 4,400. We're still 120 points below that, so we're nowhere near breaking that. And you wouldn't expect to be with everything that's going on in the world, obviously. Maybe some bottom fishers here, but if we break these lows, I think it's obviously going to be game over for a bit. The S&P cash. So we gained 107 points. You'll see in a minute what that means from an intraday basis. The NASDAQ 100, though, was up 474, which seems like a blip anymore. SOX up 125. Biotech's up 122.17. Russell 2000 up 53.27. Crude oil up 34 cents to 109.4. Now remember, this has gotten over 130 over the weekend, so this is interesting that this comes back as we're cutting off Russian oil, talking to Venezuela, and probably have some other options on the table, which you have to expect. But again, it did come back. And keep in mind, oil's gone from just over 60 back in December to 130 for a spike the other day. A lot of what's going on might be priced into it, so we'll see what that means. And it could be a very temporary thing depending on how this war goes. But no one knows yet, right? That's the whole issue. Gold down $8.60. Advanced decline ratio on the NASDAQ up 20 plus 2,200, basically 21.99. So one of the biggest advanced decline ratios, maybe in the top 20 of the last year. Cool. And the New York plus 1541, also pretty high, but just one day. NASDAQ volume 5.6 billion shares. So, I'm sorry, 5.3 billion shares. And while it's good volume, it's pretty much less than most of the days we've seen since the Ukrainian situation started. So it is what it is. Gold, VIX down $2.68. So this still hasn't gotten to 40 yet. It'll be interesting to see what happens between here and Friday. The trend closes at 0.89, puts the 10-day at 0.9. Again, we're going to drop some big numbers. If I count backwards, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I mean, 10 days ago, 8 days ago, and 7 days ago were big numbers. So if we get more low readings over the next 4 days, that's going to put that 10-day moving average back under 0.85. And remember, that was the second sell signal in the market both times it hit so far this year. Apple up $5.51, kind of looks like a blip. Amazon up 65.29. Sitting at the lows, but they just announced a 20-for-1 stock split, as did Google, obviously, which didn't help them in the current scenario. Facebook up $8.21, still sitting very near lows. Google up 126.31. Goldman Sachs up 12.22 is what it is. Netflix up 17.03. Peloton bikes up 89 cents to 23.44. What a mess there. TLT, the 20-year bond ETF down $1.35. So bonds down, rates up, right? Tesla up 34.57. Zoom closes up 59 cents. But again, who cares? Like, it's down from 400 to 100. Not good. Bitcoin sitting just over 40,000. Actually, almost at 41,000 as I do this. All right. So that's where we sit. Now, if we look at the intra day action here, here's what you got. The ES, like I said, it was a weird day because we basically just gapped up big. Not over the highs of the prior day because that's how big the move was. And then it was really an uninteresting day between this. Like, whereas Tuesday was up and down whippy, and you could have gotten yourself head thrashed around if you tried to trade too much, today was boring. And this is what keeps happening. We're not just getting standard setups, 2 days in the same direction, all that type of stuff. So you got to be very cautious in the markets right now. NASDAQ doesn't look too much different, although it did close over the highs of the prior session. The Dow was up 653 points. So what's left for the week? A couple things. First of all, be aware with the CPI tomorrow morning. That's one of our big three. So our half size for Forex ahead of overnight here ahead of tomorrow's session. We got the initial and continuing jobless claims numbers. That's all at 8:30 a.m. Eastern Time. Natty gas at 10:30 or 30-year bond auction at 1. Federal budget balance at 2. And then Friday, really the only thing we have is University of Michigan sentiment. We don't typically do market previews for Fridays, as you know, because the market doesn't do much. Now, having said that, this is probably going to be, other than what's going on in the world and that could have an impact, it's probably going to be a more interesting day than typical because it is futures contract roll. So next week is triple expiration, but Thursday going into Friday, we roll from the March contracts to the June contracts, which means a lot of the money gets sidelined for a day while it waits for the technical setup. Our levels for Friday will be based on the June contract instead of the March contracts for the most part, but that will be based on low volume trading on Thursday in those contracts. So it is what it is. Usually the bigger players stay aside on Friday, but that doesn't leave us in a good place going into with all the news that's going on. Next week's triple expiration, we'll talk about that over the weekend. Charts as usual brought to you by eSignal. If you've not yet taken the trial of our services, feel free to do so. We will help you out for a couple weeks. Oh, one more thing I did want to point out that this comes up over and over and over again. Let me see if I can get this situated properly. Maybe. All right, there you go. So this is the inflation-adjusted price of oil at the pump, basically. So while everybody's complaining right now, what does this mean right now? Everything, highest oil prices ever. This is the same thing as saying more people voted for this than ever before. Sure, because there's a lot more people on the planet than there were 20 years ago. So everything's going to always be more. The question is it more proportionately, percentage-wise, or whatever else? So this is the price of oil at the pump adjusted for inflation. And when you look at this, actually, it had been down, but it's, it's down lower, obviously, after the breakdown in 2008 and most of the 90s and all that type of stuff. It was at its worst from 2000, let's call it 2002 to 2008. That was the worst for oil. And then it collapsed when everything collapsed and the housing crisis and everything that went with that. And then it collapsed again, rose back up, collapsed again late in 2015, which is fine. Generally we like to see oil prices down and we like to see them sitting in that lower range. And then it collapsed again over COVID because there was no demand, and that was actually one of the lowest points we'd ever seen. So having said that, when you look at everything right now, and you look at the fact that prices at the pump are an average of $4.14 across the country, and obviously some areas seeing higher than others, that sounds substantial, but I do want to be clear, it's really not historically. And I think that's why the market's not freaking out as much as some people think it should. It's just, it's not about the final prices at the pump. What you and I remember when 30 years ago is not the same as a price today. So let's be clear, oil is not really at sky high prices right now. Could it still get there? Sure. I think that would have to look at like $7 to $8 a gallon, but we'll see what that gets to. All right. Charts as usual brought to you by eSignal. Have a great Thursday and Friday.